this way.
Now you are going to use the chat box in this training. You are going to use the chat box in this training.
I think you know what I'm doing.
All right, you are going to use the chat box in this training so that we will not be distracted by too much noise. So all what you'll be hearing will just be from me. Whenever I need you to talk, I will unmute you, okay? So that we have a good experience as we take this training. Before I start personally, I'd like to share a video with us. A video with us just to introduce what Forex is to us, and then I'll take it up from there. All right. I'm taking up my video now, and then I'm going to play that video for you.
If you have ever traveled to a foreign country, you may have needed to exchange your money. If so, you have already participated in Forex trading. Forex is the short form of foreign exchange. Well, companies buy goods from other countries. In order to buy them, they need to obtain the local currency first, just like us when going on holiday. The difference is they will exchange huge amounts. When these companies exchange these huge amounts, they will actually move the price because the demand for the currency that they need increases. When the demand increases, the price increases. With all this exchanging going on around the world, the exchange rates constantly move. This is how it works. When currencies are exchanged, they have a certain price, the exchange rate. As in any market, the price of a currency is determined by the law of supply and demand. If there are many people or companies that want to change euros into dollars, the price of the dollar will rise against the euro, and so the exchange rate will change. Let's use an everyday example to explain how you can actually profit from this. Say you live in Europe and went on holiday to the United States. Let's say that you changed your 500 euros into US dollars at the rate of $1.4 for every euro. You got 700 US dollars, but you do not spend any money at all. So you still have $700 after you come back. After the exchange rate moved from 1.4 to 1.3, instead of getting just 500 euros back, you actually get 538.5 euros. You have gained 38.5 euros simply from holding your money in dollars while the exchange rate changed. This is essentially how we trade in the Forex market. We buy a certain amount of a currency, hold on to it whilst the exchange rate moves, then change it back, making money along the way. How to decide when the right time to buy and sell is exactly what we teach you throughout the rest of our learning lessons. As you can imagine, traveling a lot and saving a bit of money on your holiday budget and then exchanging it, it's not really a practical approach to trading currencies. Fortunately, there is an easier way to do this. You can trade currency through online exchange offices called brokers. What this means is that you can exchange currencies online throughout the day and take advantage of the constantly fluctuating exchange rates. Just as in the example of when you went on holiday, you can buy different currencies and make a profit as the exchange rates change. This is trading the Forex market. Trading Forex online with a broker has many benefits. You can trade Forex from your home or anywhere that you have an internet connection. The Forex market never sleeps. It is open 24 hours a day, 5 days a week, and so can suit your daily routine. You do not need a huge budget to get started. As little as $150 is enough to begin trading and building your account over time. Of course, it will require some learning until you get there.
All right, guys. So I believe that you've gotten one of the things from this video. If you enjoyed the video, please put one in the chat box. If you enjoyed the video, put one in the chat box. If you enjoyed the video, or some of my need responses. If you are challenged watching the video, put 2. If you enjoyed the video, put 1. If you are challenged watching the video, put 2 in the chat box. But whatever the case may be, I'm sure that you still get the recording of this meeting. So, okay, Violet, you are welcome. You didn't really get the video, all right. Mr. Biodun enjoyed the video, all right, no problem. I'll still go over the summary, and you can still watch it over and over again from the recording. All right. So what it simply means, what is Forex? Forex simply means foreign exchange. So Forex simply means foreign exchange. Foreign exchange. Okay. And it means you are buying one country currency and you are selling another country currency. The forex market is the largest market in the world, and up to $5 trillion is being traded every single day. Every single day. I need to stop sharing my screen. So every single day, $5 trillion is being traded on the forex market. On the forex market, we trade different currency pairs. What we do is, you know, when you are exchanging dollar with naira, when you go to Aboki will tell you that dollar today is 365. By the time you go the next day, and tell you that no, it's 367 last. That's how much you want to trade it. Which means between yesterday and today, the price of dollar in naira has moved by maybe 1 naira. Okay, so that 1 naira move is the rate of exchange. But I want to let you know that it's not just 1 naira that the forex market changed. Okay, it could have changed in bits and pieces. For example, I wish I can get a board. Let me see if I can get a board here. Okay. All right. If you can see my notepad, I want you to put a 1 in the chat box. If you can see my notepad, put a 1 in the chat box. Awesome. So let's say, for example, I'm going to use Euro and USD. Euro versus USD. They tell you that Euro versus USD equals to 1.0878. Euro is the currency of Britain, okay? I mean, of European countries, okay? Because Britain has GDP, that's GBP, that's Great Britain pound, okay? But Euro, UK, they spend Euro, while USD is US dollars. So if they tell you that the price of Euro and against USD is 1.0878, it simply means, let me increase this so that you can see it boldly. Okay. So it simply means that €1 is exchanging for $1.0878. Okay. Now, maybe that's the price of Euro USD today. But the next day, the price has changed to 1.0879. It simply means that the price of €1 is now 1.0879. There's been a change. How much change has there been between the two of them? That would be 0.0001. Okay, that means the change in price of this currency pair is 0.001. Now, this is exactly what we are trading. The fluctuation in the changes, the fluctuation of the currency pairs. You know, when one strengthens, the value goes up. When it weakens, the value goes down. So we are looking at the change in that currency pair. That is what we are trading on the currency market. Now, if you look at my chart, you can see my chart. I want you to put a 3. If you can see my chart, put a 3. The Forex chart right in front of me, put a 3. Beautiful. Now, let me see. Now, if you look at the left side of my screen right here, you see different currency pairs. Pairs are put to side by side each other. For example, this is US dollar versus Canadian dollar. US dollar versus Canadian dollar. And I want you to know that every second, the price is changing. Every second, the price is changing. You can see that this thing is moving. We are live in the market right now. You can see there's changes every second. The price is changing. This is the price, the rate of change of this. This is what we are trading in the Forex market. This is AUD USD. AUD USD means Australian dollar versus US dollar. This is what we call Euro AUD. That is Euro versus Australian dollar. Look at this. This is GBP SND. That is Great Britain pounds versus New Zealand dollar. So how this market is changing, you know, is what we are trading on the Forex market. If you notice, there are 3 letters for each currency. USD is US dollars, CAD is Canadian dollars. So each currency is represented by 3 alphabets. 3 alphabets. So you get to know each of these alphabets as time goes on. Now, why is Forex trading very, very interesting? It's very simple. You know exactly what is happening in the world economy, number 1. Number 2, you can actually analyze as a Forex trader what is going to happen in the Forex market. For example, I can say that this market as it is going to come down in the next 1 hour. This market is going to come down in the next 1 hour. Now, what you are seeing here that looks like candlesticks, these are the prices of the currency pair that we are looking at. Now, right here we have US dollar versus Canadian dollar. If you look at the top left corner, you see USD versus Canadian dollar. Now, the price currently is 1.41751. 1.4175. In fact, it's changing. You can see it's changing. Okay, it's changing as you are seeing it now. It's changing. So, what a Forex trader does is that I want to predict, or you want to determine where this price is going to go. If you say that this price is going to come down up to this point, okay, up to this point, and then you said, okay, I'm going to sell this currency pair. Selling currency pairs, that means this currency is coming down. They are saying it's going to come down, so you want to sell it. So you are going to sell the US dollar to buy the Canadian dollar. So once it comes down, you are making money, which means when the price is going down, you'll be making money if you are selling. But if you say, no, from what I'm seeing on this chart, the price is going to come up maybe to this area. That means you are saying in the next 1 hour or the next 2 hours, this price is going to move from 1.41780 to 1.4269. And then you now take a buy. That means you want to buy this currency pair because you believe that from your analysis that the price is going to go up. That means this chart you are seeing is going to go up. That means you want to buy the currency pair. And if price goes in that direction, you'll be making money if you are buying. But if price goes in the wrong direction, you have said that you want to buy this currency pair, but you now entered a sell and price now goes for a buy. That is when you lose money in the Forex market. This market trades $5.3 trillion, even much more daily, much more daily. Okay, and we trade this market online. Like you can see, this is what we call the MetaTrader 4, and on this chart is where we see every currency pair globally. As money is exchanging hands between banks, between individuals, between real exchanges, between countries, international travels, this chart will be showing exactly what is happening. We also have commodities that you can trade on the Forex market, like oil. Now, somebody said that Nigeria is already in recession, that we are deep in recession. As a Forex trader, we can see that already on our chart. This is the oil chart. This is oil chart. This is the spot oil, crude oil chart. Crude oil chart. As you can see, the price of oil has really gone down. Right on this right hand side is the price. You can see 20.73, which means oil as at now is selling for $20.73 per barrel. But as at the beginning of the month of last month, this is the month of March. At the beginning of last month, crude oil was selling for $48. As at the February, crude oil was selling for $54. In January, crude oil was selling for $65. If you remember, Nigerian budget was based on $60 per barrel because our economy is strictly based on oil. We are an oil-based economy. And so when budget was prepared late last year, the government used $60 per barrel as the basis where our money will come from. But imagine oil has dropped from $60 to $20. The good thing about it is that, yes, the economy is in trouble. Nigeria is in trouble already because of this. But as a Forex trader, we are already seeing that this market is going down. And we are making money, even though the country is saying we are in recession. That is the good thing about Forex trading. Whether the economy is going up or is going down, the Forex trader is making money. Is this good news? Do you like it? Put yes or no. Do you like that? As a Forex trader, you are making money whether the economy is going up or down. If you like that, say yes. I want to see your yeses. I want to see your yeses because I need to know you're following. In this chart, you were trading oil. And from here, you started selling oil. That is January. You were selling oil. You were selling oil. You were selling oil. You know, you have been making money. When Nigeria is crying, you are making money. When Nigeria is crying, you are making money. Now, for us now, from here we can know when oil will begin to go up. For example, I'm already seeing a pattern. All these things are going to learn. Okay, that when the chart crosses up this line that I just drew, this is just a simple analysis you'll be learning. When price goes up to this and crosses over this line I just drew here, I know that price will begin to climb up. So what will I do? The economy is improving. Forex traders' pockets is also improving. that are going to the bank. That means this price is going to rise up. Okay, but for the past few weeks, the oil price has not been able to cross over this line that I just drew as a forex trader. Okay, so but if this line continues to go down and is not broken, we have no business buying oil. We keep selling oil. But once this line that I've done breaks to the upside, you know, I will be what? Buying, which means I'm making money. So whether the economy is going up or going down, a forex trader is making money. And this is the chart. This is where we see what is happening to the world currency. I'll have pulled up Nigeria and the US dollar chart for you, but I don't want anybody here with a Nigerian to cry, because it's pathetic. Our naira is I won't say is of no value, but the Lord will take us to greater heights in Nigeria. So you can see this is the forex chart, and this is what we are trading. This is where we make our money. Now, how do we make money? It's very simple. We want to analyze and tell where price is going. Now, if you are in the forex market and I can see that this particular Euro versus USD, this is Euro USD that is selling at 1.09566, that is going to go down to this level. You have to be sure. You don't do guesswork in forex. That is why you are here. You have to be sure. There's no guesswork in forex trading. You have to be sure. Once you are sure that the direction of this currency pair is going to go down, it's very simple. What do? You are going to sell. You are going to now risk your own money and put it in the market. Okay? Now look, I want to sell this currency pair because I expect the price to move from here down to this place. Once you sell here, you take your profit right here. That's how you make money. Okay? But if you say it's going to sell and the market now goes the opposite direction, that is when you lose your money. This is the reason why you need the knowledge of forex. The knowledge of forex. Now, let me go back to the currency pairs. Can we see my? Can you see the notepad again? All right, beautiful. Now let's get started. There's a way we name currency pairs in forex. Euro versus USD. We write them in pairs. Now the first part, that is the first currency in front, we call it the base currency. If you have something to write, I would like you to write that down. The first currency is called the base currency. And then the second currency at the back is called the quote currency. The first currency is called the base currency, and the second currency is called the quote currency. All right. Now, if it is GBP USD, now I want somebody to write in the chat box the quote currency for me. Which of these two, between GBP and USD, which is the quote currency? Put in the chat box. GBP USD, which one is the quote currency? Beautiful, beautiful. US dollar. So when you are pairing GBP and USD together, GBP is the base currency and USD is the quote currency. If we, what of this pair? USD JPY. JPY is Japanese yen. Japanese yen. While USD US dollar. Now between the USD and the JPY, tell me which is the base currency. Which is the base currency? Put it in the chat box. Which is the base currency? Abiodun said USD. Violet said USD. Okay, I'm waiting for others. Which is the base currency? Which is the base currency? Is it only 2 people in the class? USD JPY. Which one is the base currency? Toby says USD. All right. Solomon, I'm not hearing from you. Felix, I'm not hearing from you. So now, when they tell you that the price of GBP USD equals to 1.2045, it simply means that 1 GBP, 1 unit of the base currency, equals to 1.2045 of the quote currency. You must know that. Very important. You must know that. Very important. 1 GBP equals to 1.2045. And if it is AUD JPY, and they tell you that the price of AUD JPY is equals to 121.311. Who can tell me what this means? Put in the chat, but what does it mean? What does AUD JPY equals to 1.21.311? What does it mean? I want you to interpret it for me. Valentina. Okay, Valentina said it means 1 AUD equals to 121.311 JPY. Okay. Others try. One AUD equals to 121.311. Beautiful. You guys are really getting it. You are really catching it. It means AUD, 1 AUD. Let's clean up. Let's clean up. So it means 1 AUD equals to 121.311 JPY. Okay, let's do this. USD NGN equals to 370.45. Now, I want you to write for me how much is the base currency. How much is the base currency compared to the quote currency? How much is the base currency compared to the quote currency? How much is the base currency compared to the quote currency? I'm waiting. USD NGN equals to 370.75. So how much is the base currency compared to the quote currency? 1 USD equals to 370.45 NGN. Oh, beautiful, beautiful. We are really getting it. We are really getting it. Beautiful. Now, what we are doing here is very simple. At this time, on your chart, for example, maybe you're on a chart of USD NGN. They tell you that USD NGN is 370.75. But in the next, they now tell you that oil price has dropped to, from 60 within 1 day. Oil price dropped from 60 to 20 US dollar. Okay, it simply means that the Nigerian money will be devalued. Our money will not make any more sense. That means they say that USD now, USD NGN equals to 401.45. Now, who can tell me how much has changed? What is the difference between the two prices? What is the rate of change between the two prices? Quickly, I need some mathematics. Let somebody do some math for us. Okay. See, mathematicians. Mathematics 301. Okay, say 31. So below say 31.45. Valentina 31. Okay. Now, the price has changed by 31 naira. So imagine you were on the chart and you saw that maybe there was a news. You saw the news when price was 370.45. This is how a forex trader thinks. The news says that oil price will drop. Okay, and you know that USD NGN was 370.45. What you want to do now is you want to buy the currency pair. You are going to buy the currency pair, okay? Because it means that the US dollar will be strong and Nigerian naira will be what? Weak. Okay, it means that the US dollar will be strong and the Nigerian naira will be weak. So you are going to buy the currency pair so that by the time the oil price now drops, you will have made a gain of 31 naira. You will have made a gain of 31 naira. Let's go back to the chart to see the application of this. Now, look at this trade. There's a trade going on right now on this particular. This is a live account. This is a live account, and there's a trade going on it. Euro against Japanese yen. Let me see. That's euro against Japanese yen. Now, the trader has analyzed this pair. The trader has analyzed this pair. That this pair is going to what? It's going to increase. Go to buy. Okay? That's go to buy. And up to this point. From the trader's analysis that this market is going to buy and want to take profit around this place. Now, before this market started going up, he has already placed a trade. He was buying. So what is he doing now? Euro JPY. Now, what is he doing? He's buying euro and is up on the other side selling Japanese yen. When you buy a currency pair, it means you are buying the base currency and you are selling the quote currency. If you are selling a currency pair, I will need you to write that down. It means you are selling the quote currency and you are buying the base currency. I'll repeat it. If you are buying a currency pair, for example, Euro JPY, it means you are buying the base currency and you are selling the quote currency. That's what it means. So you expect that the base currency is going to be strong. That's why you are buying it. So this person is buying this currency pair and is already making money. Okay, you can see he's already making money because he was able to analyze properly and is making money. And he's expecting that this price is going to touch this place before it takes profit. Okay, he can decide to take his profits now. He has made $9, you know, but he can decide to leave it until he reaches where he said he's going to reach. Okay. However, if you are selling a currency pair, it simply means the opposite. You are what? If you are selling a currency pair, it means you are selling the base currency and you are buying the quote currency. So, for example, this Euro JPY, if this person was actually selling, it means that he believes that the quote currency is going to be stronger than the base currency. That's why he's selling. But for him to be buying now, he believes that the base currency is stronger than the quote currency. Okay, that is why he's buying this currency pair. So it's very important you know why you buy and why you are selling. Why you buy and why you are selling. If it is clear, please put clear in the chat box. If you are clear what I just said, put clear in the chat box. If not, put 0. If you understand, put clear. If not, put 0. Only one person is clear with that. Others I'm not seeing your chat. If you are clear with what I said, that when you are buying the currency pair, Valentina is clear. Very good. Very good. Very good. All right. Only 2 people are clear. Solomon is out of this form. Sabiode is just coming back. Okay. All right. So we get that. Now, let me tell you more about this. Is a tool that we use in trading currency pair. This tool that you are seeing here, this software, is called the MetaTrader 4. MetaTrader 4, and you can get it from a broker. Some of us have tried to open our broker account. Some of us are still on it. I've sent the account manager phone number to some of us so that we can reach to him so that I can approve your account. You can get this from a Forex broker. A broker is simply like a bank. Forex brokers are like the representative of the World Bank. Somebody asked me one time, who owns the Forex market? It is the World Bank that owns this software. They now use agents, like you have the CBN and you have the bank. So the Forex brokers are like the bank to the World Bank, you know, and are the one that give you access to a chart like this. They give you this tool for you to be able to trade the Forex market and see what is happening globally all around the world. Okay, what you are seeing here is how this currency pair is changing per second. You can see this one. This is GBP versus the US dollar. That's Great Britain pound versus the US dollar. We are seeing how, you know, every transaction over the world is being recorded on this chart. Okay, I can see what is happening in real time. And this market is open from Sunday evening to Friday night. So 24 hours. From Sunday evening to Friday night, this market is open. It is closed on weekends. So it's like whenever you wake, you can wake up in the night, this market is on. People are buying and selling. Okay? You can wake up in the morning, you know, people are buying and selling. In the afternoon, people are buying and selling. This market has been there before I was born. Some people say, can this thing crash? This Forex market can never crash. Before my father was born, this Forex market has been there. People have been trading on the Forex market. Okay? So you have no fear about the Forex market. It is always there. When the world goes to recession, Forex market will be there. Even after recession, Forex market will still be there. So you can make your money once you can master this thing. You can make your money any time of the day. Just log in, look at different charts, different currency pairs, you know, and once you see a very good opportunity, you jump in, make your money, close your trade, and you are out. Okay? So this market is there 24/7. 5 days a week. Abi? Yeah, 5 days a week. 20 days in a month. You can trade the Forex market. Now, I'm going to give space for questions and answer if there's something that you still want me to address. Okay, I want you to just so who has any question? If you have a question, just put in the chat box. You have a question, then I'm going to unmute you. Okay. Valentina has no question. Does anybody have any question? You have a question. Beautiful. Who else has a question? All right, I'm unmuting you, Mr. Biodu. Please ask your question.
Hello?
Yeah.
Can you hear? Okay, yeah. Good evening, everybody.
Good evening, sir.
My question is, as you mentioned on this introductory class on brokers being the ones that manage our accounts.
Yes.
So far, I've heard in Forex, they used to talk of we trading against the broker, or that the broker, how will I put it, they'll say, you like that the broker is not your friend, or you are trading against the broker, or the or you.
I think I understand your question.
Is when you lose the broker, is help us shed more light on that.
Okay, beautiful. Actually, we are supposed to talk about brokers in another session, but I will quickly answer that question. The truth is, of course, there are some brokers that are not regulated, and they can do, if you are not with a good broker. That's why I looked for a good broker and I recommended to you a broker that will not trade against you, a broker that whatever you do, you can hold them accountable. That's why I made sure that we have somebody we can call, a broker that we can call and relate to it. If once your money is ready for withdrawal, you have somebody that you can follow up, that you make sure that your money gets to you. Now, most of the time, it is a fluke. Most good brokers don't trade against traders. Because whether you make money or you don't make money, broker will get their own money. They will get their commission. Okay, so why would they trade against you? When you lose, a broker will make money. When you make money, a broker will make money. Because they get commission per trade, that once you enter a trade, they get their commission first. So if the outcome of the trade is not their business anymore. They've given you the platform. Once you enter a trade, there's a commission that goes to the broker. Okay? So whether you now win or you lose, their commission has been paid. So there's no reason why a broker should be trading against you. Because whatever you do, if you lose, their spread is their spread. If you make money, their spread is their spread. Okay? So the only way probably you can have dubious brokers are those that are not duly registered, are not duly, duly licensed. Okay? And there are many brokers like that they don't have good regulatory body that they are registered with. So it's very important that before you choose any broker, you make sure that they are well regulated and you can have access to them. Okay? So I hope that answers your question, sir, Mr. Biodu.
Yes, very, very well. Very, very well. I understand it very well. I think they have no reason to trade against, since the spread, they all get it either way.
Exactly.
I understand.
Exactly. There are some people that may want that actually may be trading against you, but they are not brokers. We'll get to that point. we have the bankers, we have the big ones, and all that. We get to all that point, and then we will learn how to trade as they are trading. You know, the way they think. These are the things, the secret that will be dropping for you in this place. You know,
Okay.
you learn how to trade like them, so that
Like them.
when they want to do their mago, you are there with them. So if they make money, you make money.
Very good. That's sharp.
Yes, sir. Yes, sir. All right. Anybody that has question, put in the chat box if you have a question. Any other person that has a question before we call it a day. So if you understand everything that we have done today, I want you to put in the chat box 5. The number 5. If you understand all that has been discussed today, put the number 5. Awesome. It means you are making progress. It means you are making progress. Awesome. You're making progress. Valentina put thumbs up. That's good. Now you know that it's not a hospital chat, or what did you call it yesterday? Now you know this is a Forex chat, right? Awesome. Awesome. All right, thank you guys. I'm going to stop the recording. The recording will be available, so we can always go over this introductory class. Tomorrow we'll go deeper. We're going to talk about PEEP. We're going to talk about the values of PEEP, you know, different things. We already have the course outline, okay? So we are done with today's class. Once the link for the recording is ready, I'm going to be sending it in to the chat. And those who didn't pay for this course, they also get recorded.